Now we have the three of you here who have perspectives from very, very unique and different industries. So I was wondering if we could kick this off with you explaining, what the innovations are that impact your businesses the most and why.
Starting at the far end, or
whoever feels like.
Well, I think with the advent of the Genius Act and obviously Mika in Europe representing Lloyds Bank, thinking about what banks have done in terms of being the predominant form of private money, and therefore the money that everyone uses here in the UK has generally been issued by Lloyds Bank. The advent of a new wave of private sector money issuers is obviously a big threat, and potentially also a great opportunity if we understand how to participate in that. Hence creating at Lloyds the Digital Finance Lab, which I lead, to help make sure that we are supporting our customers engage and we can participate in that opportunity rather than vanish as others grow in our wake.
Thank you. So from Tata Communications' perspective, we are building the digital fabric or digital infrastructure for a hyper-connected ecosystem, which is always real-time, always on, seamless collaboration. And the way we're looking at internet is very pervasive, very omnipresent, just like electricity and internet today. And I think we heard some of the speakers earlier today talk about it. So if I look at it particularly from different aspects of a business and how we're infusing AI into each of our businesses, in network, we run 1/3 of the world's internet. So what we are doing there is we are making the network more intelligent. We see AI creating a lot of workloads that is there, and they're running on the old legacy. So these networks, so the customers are demanding more bandwidth, lower latency. We are having agentic AI do self-healing networks that is there. If I look at it from a security lens, it's really the good AI fighting the bad AI. If I look at it from the lens of cloud, and we talked about the massive infrastructure spend that's happening on the cloud. Now, what's very interesting is when all these workloads are moving to the cloud, the training to the cloud, with the inferencing to the cloud, these clouds need to be connected. It's connecting the enterprises to the cloud and the clouds within themselves. So we feel we are in a very unique position today, where we are probably the only provider which is addressing both legs of the fabric here. The other thing is around, I would say, hyper-personalization. So we're building the next generation customer experience platform, Kalera, actually not building, but it's built. And it drives the hyper-personalization. And we heard our CEO, Lakshmi, earlier today talk about voice AI as just an example. You see, today is the fastest single speech-to-speech real-time voice AI platform available in 40, different languages. And lastly, we're bringing the capability of edge and analytics to the cloud. So we see across all the four fabrics, AI as being the single thread which is actually impacting the business, and infusing it for the end clients.
Thank you. So for those that don't know Poppins, when sat next to Tata and Lloyds, so we are an award-winning global digital and creative innovation agency headquartered here in London. And fundamentally, we work with the brands you know and love. Innovation is the core of our business across the board. Now, for us, and the line I'll use a lot of people don't like hearing, agencies that don't transform utilizing AI, I think over half of them will be gone in the next 2 years. It is a tsunami of change that's coming for all of the core pillars of the businesses, and it's something that we have grasped with both hands. The areas of change for us, if I was to say top 3 areas of change for us as a business, would be creativity. Obviously, it's transforming the creative process and workflows, which I can talk about more later. Efficiency, and by efficiency I mean workflow efficiency, but also working with executive leadership teams of large businesses and helping them understand and therefore flowing that down to the wider business. And lastly is data insights and business foresight and client foresight. We can now understand the now and next of clients better and faster than we ever have been able to. So huge transformative force in our world.
I mean, I think you just touched on that you're also helping clients at implementing these new technologies. Now, when you're in a large, working in a large company and all these new technologies come at you, you have your processes and your workflows in place and everything, was set up for a reason. But now everything is changing so quickly. How do you adapt within your own companies to address that change, and how, to be able to quickly go into it and not miss out on these innovations that you mentioned?
Yes, that is the question. So we started the Digital Finance Lab earlier this year. It took some time to persuade the organization, to be honest with you. So that's one of the first hurdles to get a large tanker to start changing direction. Just the persuasion of the of the senior management takes some time. There's 60,000 people you've got to persuade and take on the journey with you. And from starting that in March time, in July, we started using digital assets as collateral in our FX trading business. So we managed to go through all the product approval processes, and work through how sort of that enterprise risk management framework, actually at a high level, the 21 risks that we sort of manage across can all be understood and adopted in different ways. So yes, we're now starting to use blockchain technology to run margining processes in our financial markets business. But you can still apply the same enterprise risk management framework to evaluate the risks, whether it's the product risks in the business or whether it's the technology risks. And it's been an education process. People think, oh, blockchain, DLT, crypto, that's just bad. It can't possibly fit in our enterprise risk framework. But actually, when you take a step back, remove yourself from the emotion of it and actually go, well, where does it fit? Where does and you can just map and do your traceability of all the risk issues across the tech side of your business, the product side of your business. And once you've done that, I think actually even a large organization at enterprise scale can then rally behind you and help you deliver effectively.
No, thank you, Peter. And for us, I think, we already talked about how we're infusing AI into our products to service our customers. So that's the customer lens. The whole objective is that, our products need to be really differentiated, create a, revenue momentum and the customer experience. We also looking at AI from an internal perspective. How do you imbibe this within our company? Now, there, I think, which is across, different functions, and that's the beauty of AI. It's supply chain, it's legal, it's HR, it's sales, it's marketing. So each function of ours is actually working around it. I think it has a board level visibility. I mean, the fact that a board spent an entire day, discussing AI was really good. And lastly, I would say, we've developed AI maturity, index, which has around 42 parameters. And I think we are measuring each of our product sets, each of our functions around capability and outcome. And what it does is at least creates healthy competition within the company.
It's interesting hearing your perspectives, because for us, there's a dual lens, right? It's how do we transform our own company, our own agency, but then how do we step into world-class Formula One team, executive teams, and help them transform their businesses? There's two very different approaches. The way I would position it is that it's really about being a compass and not a stopwatch. There is so much change happening, and clients are so hungry to understand and see what's helpful for them. I mean, I'll give you a funny example. I was doing a vodcast, sat with a CEO, a very well-known CEO, 3.5 weeks ago, talking about this exact subject. And we filmed it. He shared his views. I shared my views. By the time we filmed it and cut it and published it, actually a bunch of our views were out of date in 3 weeks. So it's changing at a very rapid pace. So actually brands and businesses need to take a step back, look deeply in their own strategies and see actually what is it they're trying to do and actually what works, rather than continually jumping to the next biggest. And otherwise you're just chasing your tail all the time.
And I think you mentioned acquisitions play a role, and that would be interesting to hear when you're looking at other companies where you see interesting technologies or skills that might be important for you. Like, how do you make that decision, what to acquire, what not?
I think there's a changing mindset in some of the largest financial institutions where we're starting to think that we can't have too much risk to a supplier, and we need to know this technology for ourselves. So this idea of acquiring services and then doing supplier management, and that's becoming a little bit outdated. We've got to have sort of a two-pronged approach here of how do we manage the risk of that supplier going bankrupt or having an issue or whatever it might be that causes a disruption to service. We don't necessarily want to put ourselves in that situation. So that's really not starting to change the mindset now of trying to do some of this for ourselves. And I think, you've probably seen at Lloyds, for instance, quite a big change that we're trying to become, do more engineering in-house, own more of the product delivery in-house, to try and minimize our risk to any one supplier or a concentration in that space. So I'm not saying that goes away, but I'd say there's a rebalancing going on within the financial institution sector between not just looking at suppliers, but also looking at having your own expertise in-house. And of course, the same overlay remains that within that spectrum, you could also buy in expertise too.
Interesting. So I think, Peter, it's very interesting when you say, the diversity, because, from our lens and slightly digressing, when you look at network diversity and, we see a lot of clients wanting it for resilience perspective. But from the question that you asked, Christina, I think for us, it's all three, it's build, partner, and buy, acquire. So I think for something which is where we want to own the core products and the IP, we are always building. I think that's a journey we are always on. If I look at blockchain as an example, we would not be going out and, doing a quantum compute, infrastructure setup right now. But what we'll be doing is that certainly investing in, quantum secure framework, because, when quantum compute comes in, your security, becomes vulnerable. So that's the kind of company we'll go out over there and, partner with, or something like on the CX, where we felt we were late in the journey, we've gone and partnered with somebody. And acquisitions, I think we've done about, probably 3 acquisitions in the last, I would say 2 years. And that spans, from your OSs and eSIM, getting edge connectivity to looking at communication, CX platform to, something for bringing live games out there, a company called Switch.
This is a very personal one as a founder because we put our own money where our mouth is. Over the last 2 years, we've acquired 4 other agencies, and the methodology we apply is really an 80-20 rule. 80% in investments we know for sure are safe and will work, and then 20% actually tying into the partner and then purchase piece. So we've acquired an automotive consultancy to bolster our automotive side, which is a core part of our business. We've acquired Europe's leading social marketing agency because social is clearly one of the leading ways of communicating with customers these days. We've then gone on to buying an experiential business because actually we're seeing the data in this magical AI digital world is that there's so much eyes shifting towards the physical space and how you connect the digital to the physical. But of course, we then partnered and then acquired an AI consultancy specifically to bring in their clients, their expertise, to then enable them to train us, our leadership team, our wider business. And then we now offer that as a service to all the big businesses in the world.
I think we can maybe go a bit more into what you build yourself and how you decide what to kind of like outsource. I think, Amit, we spoke about this ahead of our panel, right? It's the question, what you really want to own versus what you can get from someone else, and also how to prioritize this in terms of really the macro environment that is quite uncertain, and what you're spending your money on. So could you share, because I've really seen this in a lot of analyst notes also that I combed through for another completely other analysis I did recently, that that's also what the analysts are seeing, really, companies building their own tools. Do you feel like this is due to the macro environment we're in now, or is this more the pressure of the innovation that is driving this trend?
Oh, is it for me?
It's for all of you, I think. We're all in the same boat.
Yeah. So I think we rely a lot on the, we have a very impactful external ecosystem of, I would say, startups, venture-funded companies, universities. We do a lot of, co-creation with the clients. So I think that gives us an edge on, understanding what the market dynamics are. And related to, what you were saying earlier, I think this is the new normal. I mean, it's not going to be any different. I don't think it's going to change, or we don't believe it's going to change the next, couple of months or possibly years. So we are working across, this whole, uncertainty. And we do have, our frameworks in place in terms of prioritization of what we take forward to the market or not. We follow something called 1-3-30, where we might co-create something with the client, take it to 3 clients, take the learnings, and then we take it wider into mass market across the world. That's how we are adopting it.
And so I'll apply it to, let's say, some of the blockchain decisions we're making at Lloyds. I think when we think about wallet infrastructure, we think one of the key expectations our customers have would be that Lloyds, trusted brand, we've been looking after keys, like our Swift keys, for instance, to access our Bank of England account with something like £50 billion in. You can imagine we look after those keys very, very safely. And I think our customers would expect that we'd look to deploy some of those standards and learnings to the same extent to look after their money and assets that might be part of a future Lloyds wallet service. So something like that, isn't something that we're going to very easily be sympathetic to outsourcing. If we chose to do that, that would be, critical supplier, super severe supplier impact. And to be honest, therefore, my preference would be, well, that's kind of my USP, actually. That's the bit that creates the trust, and that I really need to deliver that. So that drives me to picking, well, that's the bit I'm going to build. I need to do that key management. I need to look after and deliver like the UX for that wallet solution, make sure it's connected to all the places our customers want. Now, there might be an acceleration play in terms of using partners to get market penetration faster. So there's always a sliding scale, but there are certain parts that I believe definitely in sort of the digital assets business for Lloyds that our customers are going to expect us to know very well. And frankly, if we know it very well, because we have the engineering capabilities in-house, it makes my team better at selling the product. It's a more convincing sale. So that's a bit of an example of how I'm thinking about, build, buy, partner.
Mm-hmm.
It's interesting. When we were talking to clients maybe 2 years ago, the concept of an app wrapper, AI wrapper business or product was completely pushed out of the room. Even when you looked in Silicon Valley, the valuations weren't there, and that's shifted entirely now into having billions of value in it. More often than not, to get to market quickly, we will recommend using the existing platforms. More often than not, we will use an app wrapper product that is underpinned by the big platforms, but is hyper-personalized to the brands you work with. That said, we are working across a number of very large businesses, brands, global auction houses, where we are building AI into the kind of very weave of their products in a way that is not really necessarily seen by the customer, but is working with them in an owned way at the same time. So really, it's a balance, I'd say 80% platform-based and 20% custom.
Mm-hmm. And with all the big range of technologies and solutions out there now, could you maybe share a few examples or an example with us what you thought in the beginning is really promising, but then when you tried to implement it or, had a closer look, it didn't turn out to be as great as you hoped to be, so you can save us all some work?
I'm still hopeful for it, shall we say.
Okay.
But it's taken us longer. Money is very much a collaboration, a consortium play. It presents itself as £1 or €1 or $1, but actually there are many issuers of pounds, euros and dollars. There are many private sector banks, for instance. And so that level of collaboration takes some time, and I think occasionally I've underestimated that. It's taken a long time to build fractional reserves banking and present a pound, and everyone sees a pound in a Lloyds account as the same as a pound in another UK bank account like Barclays, HSBC, etc. But back in 2019, I invested in a business with many of my peers, Finality International, which is about tokenizing central bank money. And so that meant we immediately had the foundation of programmable central bank reserves, which you need, in my opinion at least, and I believe everybody else is catching up now, to have programmable tokenized deposits. But we ended up delivering the central bank money first and not sort of the customer facing money. So the amount of use cases that have been ready for Finality, has taken us some time. And the other side of things is that trying to, in 2019, deploy new technology like blockchain into a central bank instrument, perhaps I was a bit naive in the rate of progress we would make. So I don't necessarily think it was the wrong play. I think my thought process on the time to market was very wrong. And as a result, we've not gone as fast as we could do. And I also think that we built a foundation without the use cases. And that's a regret for me, that, next time when we make those investment decisions, that needs to come with much more of a strategic engagement across all of the investors, so that the customer use cases are there, as well as that foundational capability.
See, I think my perspective would be that, technology is always, there's an evolution that is happening. And I think with the way the technology is and how it impacts any society, economy, or businesses, if you look at the steam engine, it was 60 years, the internet was 30, the smartphone was 15, and, if you look at AI, it's probably really, I would say it started in November, 2022. So you're looking at, if the time period is halving every time, we're looking at 7 years. So I think that's something, our CEO also talks about, that what we do in the next 5 years is really going to impact the next 50 years. So I think for me, I can't really pinpoint and say that, yes, this is the technology we said let's go after, and it really hasn't worked. But I think it's the pace, the adoption, and, the evolution of technology.
Mm.
I find this question harrowing and funny at the same time. We've built agencies at the precipice of technology and innovation for the last nearly 25 years. So some of the largest agencies on web, then mobile, and so on and so forth, social. And I'd say, although technology will always have its challenges, the challenge that we will always have, whether it's working with our Fortune 500 clients or our fast growth startups, is the challenge of culture versus technology. We can talk about ourselves in this case at Poppins. So we are a creative digital innovation agency. And then you turn around to a very large creative team that's filled with some of the world's leading creatives who've rebranded some of the biggest fashion brands, who've left Apple to come join this business. And you say to them, we're going to be using AI going forward as a part of our creative. The initial visceral reaction is actually, we're going to push that away. We don't want to do that. We don't believe in it. It's not going to be right, which is tough, because on the other side of the business, you have the innovation and product teams who are lapping it up and want to use it. And there's this kind of dichotomy and challenge that you have across the two. For us, the challenges we've had is, how do we implement that in our creative process that still abides by our ethos, or any company's ethos? For us, it's digitally handmade. So the fit and finish is still handmade and is still by a person with a lot of experience. And how do we actually enable our clients to understand that? Because certain clients are really eager for us to be utilizing AI, not to reduce costs, but to deliver more, faster, better, which to us also translates to joy, because you're removing the monotony. Versus certain customers, we have a tier one kind of OEM automotive brand who has put in their contracts, nothing AI must ever touch anything in the workflow, which we keep telling them is an impossibility. It's not possible, but they are very adamant that that's there. So for us, it's culture and understanding. We see the same thing when we're working with executive leadership teams and guiding them. What tends to happen is when they see the benefits, which they do very quickly in their own day-to-day, in their own efficiencies and their own outputs, all of a sudden the whole business is brought along for the journey.
Mm. Can you share how all of this is changing the way that you compete and your competition? Are there instances where you feel like, oh no, they've gotten so far ahead of us because they deployed X, Y, Z, or where you felt you really made an edge because you were faster in implementing an innovation?
So for me, trying to get the banking industry to innovate in blockchain, it was a new form of competition in terms of co-opetition, if you will. As I sort of mentioned, actually, the pound is seamlessly fungible because we all work together. So trying to make sure that there's a pound on a blockchain for everyone in the UK society to settle in sterling in these new ecosystems, means that, I want my tokenized deposit to be out there first. But actually, it's not really going to have a network effect and great utility if I haven't enabled it to be interoperable with all of my peers. I will fail, if you like, as a bank in terms of winning the tokenized deposit argument versus stable coins if I don't work and cooperate, between the big banks. So that's been, a big lesson for me is co-opetition. How do we do that? How do we manage doing that within competition law so that actually, sterling tokenized deposits or other currency tokenized deposits can get to market and compete with stable coins, for instance. As I suspect if I asked you in this room, have you heard of CBDC? You'd probably say yes. Have you heard of stable coins? You'd probably say yes. And there's probably one or two people in the room that would talk about tokenized deposits. Yeah. So we've got a lot of work to do. The competition hasn't been going great so far. We've got to go faster, but we will get there.
No, thank you, Peter. And in fact, in one of the Bloomberg, podcasts, I heard that this is the single biggest trend for the next 10 years. I was mentioning that to Peter. So I think for us, competition is coming from all angles, right? So we have to, one, protect our turf. So how do you protect your moat, as Buffett calls it? So I think we make investments into our, core business like we are doing, and we continue to do that. But I think apart from that, what we do have is I would say a growth and innovation, portfolio on steroids, right? Because we are constantly in an industry like this where you're doing the infrastructure. We're constantly innovating with a lot of new products, ideas, and the customers love it because they want to call us back, tell us the network of the future. So I think, Christina, for us, I think we have, probably prioritized on the 5 big bets, and that's AI cloud, it's your customer experience, platform, it's connectivity to the cloud, and, your convergence of within the land that we call it. And we focus around those big bets.
Amazing. Look, for us, innovating is a core part of our business. And I think I've become one of the most hated men in the agency space because I like to call it like it is. If we don't innovate and utilize technology, which, by the way, turns individuals into superhumans, then we will fall behind. And I say this time and time again, and the examples I'll make, I'll sit with a CEO of a PPC agency, and I'll say, look, when everyone's using LLMs to do their search, what happens to your business? Or if you're a video production agency, right now, if you already haven't implemented Nano Banana or Sora or into your workflow, where are you going to be in that time? And sadly, so many are still kind of keeping their heads in the ground and just hoping the problem will go away. So we are fundamentally behind the belief that technology makes our teams into superhumans. We will welcome technology as much as we can, as long as it doesn't take away from the fact that it's still a craft, that it's still finished by hand.
I mean, I think it's interesting, right? And for the longest time now, we've seen innovation as something that's global, that grows because we're being intertwined with many cultures, companies, and countries. But now, since geopolitical tensions have been on the rise, this notion is changing, and tech sovereignty is kind of the word of the hour, the term of the hour, also the topic of our conference. So I'd really like to hear your thoughts around this topic, how you think about this, how you think about this when you implement something within your companies, and how you think this big question will develop in the next years.
Yeah. Well, tech sovereignty, that question, that point is sort of exactly what I was, framing as how we pick between build, buy, partner. There's going to be much more build. I want, as we deliver the digital assets services for our customers, it's because Lloyds engineers, Lloyds know-how has built that and made that safe for our customers. And if something goes wrong, we can fix it. And hopefully that means something won't go wrong because we'll have the knowledge in-house to understand it to the right level of detail that our customers expect and therefore have come to trust Lloyds for.
Yeah. So I think our perspective is, personally, I would say my perspective, I started, saying our history goes back to 1870. I think survived 2 world wars, several recessions, and, we stay invested in the country. I think, as Tata Communications, we do for every geography, follow the regulations. So if in the UK, it means the UK Data Protection Act. If it means GDPR, if we see our clients moving and asking for, private clouds, and that's something we are heavily invested here with two data centers. A lot of our product innovation happens here in the UK in the famous Gherkin building that we are there. I think for me, the bigger question, I think, is also around, the energy sovereignty, because that's a big thing that's going to be people are talking about. Like I said, I follow Merin Somerset Webb. She's a senior columnist at Bloomberg, and she does these brilliant podcasts. And I think the chairperson for NatWest also called about it. It's about getting the investment of smart companies like Poppins agencies and so many AI firms, getting them listed here in the UK. I think that will make an impact. So.
Look, I will say our current government isn't making it easy for businesses. Neither is the geopolitical status of the world. My lens is kind of global from the sense that we're headquartered here. We have a presence in the MENA region and then the US. If I had to break it down from that lens, I'd say the MENA region, specifically the UAE and all the surrounding countries, are beginning from a ground zero. So they're building AI and technology into the very core of their DNA, and it's all being based in their core DNA. Europe is being governed by kind of a tier one kind of regulatory pieces, and it's all about regulation, and the US is all around innovation. We shift towards whichever companies are in either region and what their needs are. If I had to say what I would recommend, I would like to see it being 70% innovation, 30% regulation.